It's time for another review, a full stock analysis review, this time Medifast, ticker symbol MED. Welcome to all my viewers who are watching me on Alpha Spread. We use the Alpha Spread software plus others. We do a back test as well. We compare it to the S&P and to see how it performs. We'll look at the stock from a basic principle at the beginning. We'll just see what it is, see what it does, look at the chart in a basic form. We'll then look at the analysis of the chart. We'll go into the margins, the intrinsic value, who's buying the stock, who's selling the stock, what sort of people own it, to give you a sentiment for it. Look at the dividends, how that works, how regularly pay out, if it's a dividend stock at all, and look at insider trading, so who's buying it, so who's selling it, give a full indication of this stock. And then this video will be here as you are watching it now on Alpha Spread underneath all the analysis, so you can then get a full true picture of the stock. You can decide whether it's right for you. This is not financial advice. This is our opinion on the stock using all the software and all the information that we can bring together in a really concise video. So we are green today in the studio because we're celebrating a huge achievement with Virgin Galactic, and my studio is my portfolio is massively in the green. So if it's your very first time here and you're watching me on YouTube, and of course you're watching this video on Alpha Spread through YouTube, tap subscribe and ring the bell and give me a thumbs up. That would be much appreciated. So what is Medifast? What is Medifast, first of all? If you've never heard of it before, we're going to discover it for the first time. Medifast engages in provision of healthy living products and programs. It offers the OPTAVIA brand a lifestyle solution centered on developing new healthy habits through smaller foundational changes called micro habits. This is an unusual one, right? Okay, it was founded in 1981. It's in Baltimore, Maryland, 874 employees, and the CEO is Daniel R. Chard. Now, if I'm going to buy a company, the first thing I do is research the CEO, find out about the company, find out what they're doing and what his experience is. That's the first thing I do. I then like to look at the balance sheet and what the valuations are. You know, let's see if it's worth my time, first of all. Right, first of all, we look at, if you bought this on margin, it's got a 45% maintenance requirement, which means it's not the lowest risk, it's somewhere mid risk. It can go up to 100%, the lowest is 25% margin requirement. So it's regarded as semi-risky, if you like. Okay, dividend yield. Now then, dividend yield is 9.57, a very nice dividend. So with a dividend stock, tends to be bought by an older investor because they've grown their portfolio with growth stocks. They made their money. They now want passive income. If they do it correctly on their Roth or their ISA in the UK, they can earn dividends tax-free for the rest of their lives without ever selling the stock. But to do that, you've got to grow a stock so it's worth enough, so it can actually pay enough in dividends to be worthwhile. So you have to grow your stock first when you're younger. Unless you are very young and you're investing on day one, you're 18 years of age and you buy a dividend stock, then of course you can just keep buying it. It probably won't grow that much, but you will make money on the dividends long term. But it tends to be that mid-age people come in around their 30s, start investing, have a growth stock, something like Virgin Galactic, Robinhood, Tesla, these things, grow a portfolio and then buy a dividend paying stock. Dividends are great, but if they're good dividends, how often do they pay out? Are they frequent? No point advertising a great dividend like that if you're not actually paying it out very often and you reduce it. Is it paying out regularly? Is it paying out consistently? And if the stock is depreciating by 9.57, you're back where you started from. So you need to consider that as well. Price to earnings ratio, 568. I don't know this sector. Every sector has its own earnings ratio. A high growth stock like Tesla could be 200. It's now down about 60, which is one of its best valuations. But you need to compare it, though, within its industry. There's no point comparing it to Tesla and going, well, that sounds cheap. Price per earnings ratio. Okay, it's had a 52-week low of 65 and a 52-week high of 131. So it's very volatile this year. Okay, let's find out why. Let's scroll down to the bottom and look at its earnings. We're just doing this basic. In a minute, we're going to use alpha spread and go into some more detail. This is just the introduction to the stock. It's estimated at $1.06 on its last earnings and achieved $2.12. So it's smashed earnings. As you can see, the estimation is here. The estimation is set by Wall Street, not by the company. The company might have a very different outlook, but Wall Street said this is where they think it would achieve, and it exceeded expectations, which is great. However, it's been coming down of late. That's not good. We want to know why. So if I'm going to buy this stock, I want to look here at the peak, do the research, go onto the website, look at the investor details and see what happened in the news that started for the stock to trend down. Now, one thing I like to look at using this software, and we're going to come on to some much more detail in a few moments, is who is buying the stock. This tells me the sentiment of the stock. Who is buying it? Because if we see certain type of investor buying the stock that is volatile, things like Mullen or whatever, bad stuff like that, AMC, GameStop, we don't want it. We don't want it because it's a load of rubbish. Because the people that are buying this are buying that. It gives you an indication. It's got Verizon, 3M. 3M is good. I don't know much about Verizon. It's not one of my main focuses. J&J, of course, that's one of my favorite stocks. A dividend-paying stock, a dividend king, a solid stock. It just shows you that the people that are buying this are probably of an older age. But remember, though, at an older age, if you've got some big investors, people have often said, what if Warren Buffett sells all his Coca-Cola? Same thing. Don't take it as read that dividend-paying stocks and dividend investors are never going to sell. They could suddenly decide they want to have a late life crisis and buy an aeroplane. I don't know. Anyway, but it shows you that it's a very responsible, mature investors. So it's got some stability to that. However, when we look at the chart in a minute, we will show you that it's had a rocky ride. Let's look at it over the maximum. First of all, we're going to go into more detail in a moment. If you've just tuned in, please do subscribe, ring the bell, and smash the like. I'd much appreciate it. Okay, we've had a stock price of around about $4.83. Now, that doesn't mean to say it was paying a high dividend back then. It may have not. We're not looking at that right now, but you can do your own research. If you want my links, I can provide you links. Just message me in the chat. My members, I will reply to all of you and provide you the links for you to research the history of the dividend payouts, because it probably wasn't paying out roundabout here. I don't know. We'd need to find that out. We had a big boost here in 2017. That's interesting. Want to know why? So again, look at the news and see why that popped, but more importantly, why it fell back. We can see in March 2020, round about here, let me just go to it, March 2020, this was COVID. Now, this is very interesting because unlike most businesses, not all, Zoom went up, Peloton went up. There were businesses that benefited from COVID, of course, Moderna and stuff like that. March 2020, this stock rose and went through the roof. People liked it for obvious reasons, as we've explained what the stock is. What concerns me, though, is it had a huge input because of COVID, then fell away. So I'd be looking at going, okay, this unicorn event promoted this stock, and as COVID kind of got resolved, it's fallen away. But it did it here earlier. Well, what caused this? What caused this? And if we can see the symmetry between the two, maybe we can identify the next potential for that. Anyway, let's now go and look into some more detail. Now let's look at the valuation. We're interested in the valuation of the company. If we value the company at $187, and there's reason why we come to that number, it's not a magic number, it's in the best case scenario if all things go as planned, and then we could say it's undervalued by 66%. Great. However, that's best case scenario, low interest rates, everything fantastic. Of course, we've got macro conditions, we've got wars going on, we've got inflation out of control. Well, actually, I'll rephrase that. Inflation has actually peaked. We're going to get interest rate cuts in the spring and the summer. So best case scenario could come next summer. However, let's work on the base case scenario. Base case scenario, 53% undervaluation. Very nice indeed at $135. And we could see how we could reach that valuation when we looked further down at the balance sheet and the debt they hold and so on and so forth. That looks promising. Worst case scenario, $109, and we're valued now at 64, a 41% undervaluation. So from an intrinsic point of view, which is what Warren Buffett likes to look at, this stock is without doubt extremely undervalued. Looks good. Wall Street, give it a 29% uptake, relative value plus 53%, the DCF value 22%, intrinsic value 41, looking very nice indeed at today's price of 64. That's when it opened. We're now at 63.88. Okay, looking very promising so far. Very promising so far. Let's go now into the fundamental analysis. This is important. 1.4 billion revenue, down 10%. We can see here, I'll zoom in and make it a bit clearer for you. We peaked here June 29th, 22. We then started to come down. This is how we've seen the chart, that we've seen the valuation come down. The stock price, that is. Stock price and valuation, very different. Don't confuse them. December 30th, 22, 1.6. March 30th, 23, 1.5, and now June 29th, 1.4. Estimates are giving a slow decline and then perhaps leveling off around about here. So as we've seen this year, down 17%. If we just show you that, 10% on the latest range. Over 10 years, 274%. Is our revenue. Operating income, 173 million, down 6%. Net income, 133 million, down 6%. Okay. Capital expenditure, down 7%. They're spending less. Capital expenditure, they're investing less now. Okay, that's a good sign. Not that it's wrong to invest if you're like Virgin Galactic building rockets. There are a time to invest and there's a time to not. Free cash flow, important, up 0.2%, 200 million. That's a good metric. We like that. The balance sheet, very, very important to look at the balance sheet. We like the balance sheet. Balance sheet tells us everything we need to know about the company. The balance sheet is 319 million. That's what they hold in assets. We want them to have a lot less in liabilities. That's the health of the company. 319 million in assets, 133 million in liabilities. That's a very, very comfortable balance sheet. Very, very good indeed. The gross margins, that's the moat. The gross margin, if you've got a wide margin, a large margin, you have a wide moat, which means in a downturn, you can trim back, sell less if you're selling product, and still make 71% margin. You can protect yourself if you've got a good margin. So you want a good margin. This company has a 71% gross margin. Very nice indeed. Very, very green. 13% operating margin, net margin 10%, FCF margin 15%. Very, very good. This is healthy. This is a very healthy company. As we can see by our fundamental score, we've got green ticks across every metric. Profitability, 75%. Solvency score, 72%. Very, very nice indeed. Everything about this company so far is good. Very, very nice indeed. Wall Street targets. Now, as we've said, if we go the worst case scenario, it's still a 26% upside. This is a very, very good analysis for this chart, for this company. It looks very, very nice indeed. I like it. So we're very, very happy with this. Now go down to the ownership. Insider trading. Who is buying within the company? Who is selling within the company? We've had no real buying and selling until recently, when we had some selling here. But again, you always need to measure this and find out exactly how much is being sold by the company itself. Brown Jeffrey, the director who sold 2.1 million USD worth of Med shares. Now, this is my first initial look. I would need to go and look at his allocation. I have spoken to Alpha Spread if we could have that on the screen as a new addition. So we can go, okay, he's sold 1% of his portfolio or less than. That happens regularly. That's perfectly acceptable. So that doesn't tell me enough, but looking at the size of the balance sheet, the size of the company, that looks to me potentially like a very small amount. But I'd need to look further into that. So don't take that as anything one way or another. We have seen some buyings coming in recently, though. Again, Brown Jeffrey also bought earlier in the year, taking some profits. So that's interesting. That needs further investigation. So there we go. You can see the current price of Med. You can see where it's been going. It's currently down. It's a good valuation right now. And we can have a quick look at the latest news. Later on, you'll see my review down here as well. So we'll take a quick listen in to this. Bearing in mind, this at the time was 6 months ago. My review will appear here very shortly, which will be much more up to date. Here we go.
Well, Teladoc is set to close this week higher just a smidge after the company announced patients on the platform will now have access to prescription weight management drugs. This news coming after a week after Weight Watchers' foray into prescription weight loss sent shares soaring. Our markets reporter Josh Schaefer has been looking into why Wall Street has such a growing interest, hunger, if you will, even for this. I mean, obesity control drugs have exploded, but the difference is that people are using them recreationally, I guess, so to speak.
Right, yeah, it's spreading, right? And I think overall that's sort of what people are getting into here. And really what I talked to some folks about is the access that a company like Teladoc or what Weight Watchers bought can provide by being remote, right? So this is remote offerings to be able to offer these products. There's sort of good and bads to that. There's the positive of there is not a lot of obesity care in this country diversified throughout the nation when you think about near in a proximity to you. So it's a positive there. The negative is how people use it, of course. Right now, what you're looking at is from Goldman Sachs, and it's showing the overall growth of Ozempic, which is one of those pills made by Novo Nordisk. And you've seen that pretty much triple over the last about year and a half now. And then the bottom blue line there is Wegovy, which is also growing. But really why Wall Street's so interested in it is another graph from Goldman that shows the overall size of this market and sort of what they're expecting over the next 10 years. They're expecting Novo Nordisk probably had, I think Wegovy's annual revenue in 2022 was about $2.5 billion. They're expecting that to grow to $10 billion. So about 4 times what it is now in the next 10 years. And so this is an opportunity for a company like Weight Watchers or a company like Teladoc, who aren't making these drugs, to be clear, right? They're just going to be able to distribute them through care, but to be able to distribute those and get in on that growing market that is this weight loss drug market. And I think the FDA has only cleared some of these drugs. So Eli Lilly's drug is not yet cleared, but they are also trying to get.
Of course, we're showing you this because of the relation to Medifast, which you can now see on the screen. I don't think this industry is going to continue to grow at the rate he's talking about. People were very fearful around Coca-Cola and because of all this kind of weight loss drugs and the fear, the concern for healthy foods and stuff like that. Coca-Cola is also moving more into healthy drinks, but at the end of the day, it's a bit of a fad right now, and I mean that with the greatest respect. I think it's better to focus on healthy lifestyle than just taking pills and tablets. It gets a lot of news at first, but I think it'll fade away. I don't think it's a continual growth. We're all going to be just eating pills all the time. I don't think Coca-Cola is going to go away either. I think people will continue drinking fizzy drinks.
Get in that market, and that was the biggest part of that graph from Goldman. Goldman thinks Eli Lilly could be the ultimate winner here with that drug Mounjaro that has not yet been cleared by the FDA for weight loss.
Okay, so there's just a quick look. So there we go. That's my full review on Medifast. There's one final metric I want to show you, which you can see glowing on my screen below me, just over there. This is the back test. This is very, very important. One of the most important things. If you're going to invest in something, you want to know how it compares to everything else. So I put $10,000 in 2010 into Medifast, and I put $10,000 into the S&P $10,000 into the S&P. So we can see that Medifast is the blue line, had a dramatic like I just said, like I just described, a kind of fad type growth. Everybody all of a sudden wants to take pills to lose weight and all the rest of it. And up it goes and then straight back down and up it goes and straight back down. And as you can see, if you just stayed in the S&P, you'd have had good earnings. And remember, before anyone says, yes, but Medifast provides a great dividend, this is with the dividends reinvested. You'd have made more money just owning the S&P over the same period. So Medifast does have that benefit of the dividend, but then it doesn't grow to support it. Will they pay the dividend? They won't be able to. Just because the growth has these growth spurts, that means the dividend will come in and come out and won't always be there. So don't expect a high 12% dividend if the company's stock price is going down so low. So if you believe that this type of technology and this type of company is around forever, and you think it's no more, it is not just a fad, it's not just a fashion or craze, then fair enough. You might like to buy it, but it's very, very volatile. You can make more money owning the S&P over the period of time, which is generally speaking the way to invest anyway. But you might enjoy those dividend payouts. If you think, and you need to check yourself the history of the dividend payouts, how often does it pay it? But if you think that this is just, a fad and not going to be around forever, then maybe consider it's not one for you. I don't know. Anyway, I'm not going to invest in it. It's not my kind of stock. I'm not looking to invest in this. It's not one for me. I'm not buying it. I would rather own J&J in this kind of sector. And I'm heavily into J&J. It's a dividend king, and it's consistently doing well despite the issue now with the litigation, which will come to an end sooner than later. There is my review on Medifast. If you'd like more information, my newsletter, my X account, the post before I make them, I announce things before I do them. Click above my head, all my membership links, and it's all below in the description of the video. And over here, I'll put more videos I think that you would enjoy in this series. And look out for the discounts you can get as well to Alpha Spread. My membership will basically give you Alpha Spread for free. My members get a code which basically makes my membership fee free with the discount that you'll get on Alpha Spread. That's it from me. As always, take care of yourselves and each other.